All right, we're here with the commodity report today, and there's a bunch of stuff going on lately. Big moves in commodities. There's a lot of things moving. Oil made a nice move last week. Actually, we put out a trade signal just for just a reversal signal, looking for it to target around 75 to 80. Not really looking for much more than that at the moment, but oil has been bouncing nicely and looks to be going higher. Gold new all-time highs again and again and again.
$3,000 gold too.
$3,000 gold. Yeah, I'm very bad at the numbers because I'm looking at the returns and I'm bad at the numbers game.
You're not a y-axis kind of guy.
No, not at all. Gatlin Gauntlet. McFly's already here. He talked about it. Love it. So yeah, and if you guys give me a hand because I'm running the slides today, it's gonna be hard for me to retweet this. So feel free to retweet it, share it, however you guys can. Let's get this information out to people who need it. Natural gas, number one, up almost 40% this year. Isn't that crazy?
It's been a hell of a move.
Yeah, I just keep laughing about the people talk about the commodities being dead, and they're like, yeah, there's no inflation coming back, and you guys are crazy talking about it. And it's like, have you looked at any of these things that we consume every single day and the prices of them and what's leading the market right now? Because usually what's leading continues to lead.
But Jason, have you seen the egg chart?
The egg chart finally came down, right?
40% in a month.
Yes. So egg prices came down. You know what's funny about it, though? This is the thing that I always tell people about inflation. There's market inflation, the things we see, and then there's also the prices we pay for things. And inflation has supposedly come off pretty hard since 2021, 2022. However, if you go to the store, it's like nothing has really changed. Their prices never came back down. And part of the reason is, and this is the reason why high prices put a lot of pressure on companies like Walmart and so on, is because as their prices to buy produce goes up, for example, from corn all the way to meat, those prices continue to go up for them. They can't change those in the stores immediately. So over time, they raise them very slowly because think about it like the frog in the boiling pot of water. This is an old joke. You'll hear it down south. Basically, if you throw a frog in a boiling pot of water, obviously it'll jump out immediately. But if you put the frog in the water and then you turn it on to boil, it will just boil to death and it won't even know it. Now, I'm very sensitive to animals, so don't try that one out. But I'm just saying that's an old saying and it's actually true. So they start to raise prices slowly and people don't even recognize it, and all of a sudden your groceries are another 100% up and you didn't even notice it. And this is what happens, and they've just kept it there basically ever since. Coffee prices, though, those have continued to go up 22% at the moment. Copper going up 20%. That's out of all the metals, copper's leading the way. Silver's right behind it, up 15% year to date. Now silver is outpacing gold. What are people going to say? People give, oh, it's not outpacing gold. It's just terrible. And Sam, you brought up a great point at the Portfolio Accelerator in New York City about gold and silver last year. Can you say I can't remember. I think you said from the March bottom, the percentage change was about the same as gold.
Yeah, so that's actually still the case today, Jason. So I benchmark to March 4th, 2024, which seems like just a random date, but that was the day that gold decisively resolved its massive base that we all know what it looks like. But that was the day this precious metal bull market really got underway. And since then, the performance from gold and silver has been basically the same. I think there's like a 50 basis point spread there right now as of this weekend. I was looking at that chart.
Wow.
Yeah, but even like I think that's something like 40%, and then you look at the miners, and the miners are more like 60% since that March 4th, 2024 date.
Wow. And that's something that it's just very normal for gold and silver to move this way. And this is why we continue to say silver's probably going to be the next part of the catch-up trade. Silver will probably get going pretty soon. And then next thing you know, this rally in precious metals, from precious metals to platinum to palladium to the miners, silver miners, junior miners, it's all going to take off. I think that's coming up pretty soon.
I think it's happening right now, Jason. Like,
Well, look at platinum.
some of these miners are ripping.
Something that I didn't pay much attention to is platinum is actually ripping as well. Platinum is up almost 12% year to date. Lumber is up 10% year to date. Sugar is up 10% year to date. Feeder cattle, which we've been long, it feels like forever. Sorry about the dogs. They always know when I'm online. They're like, "Oh, I want to be on video. I need to bark in the background." But look at all of these things. I mean, this is crazy. The currencies against the dollar, the New Zealand Kiwi, the Aussie dollar's up almost 3%. New Zealand Kiwi is up 3%. The Great British Pound is up almost 4%. The yen is up 5%. The euro is up because of that squeeze that happened that we were talking about on here a ton lately, is up 5%. Yes, these are small moves. They might feel small to you guys, but for currencies, these are very large moves. That's significant.
Right. They're not cryptocurrencies.
Yes, and it goes into different areas. So why we're seeing the weakness in the dollar giving a boost to these currencies, it's also giving a boost to these commodities up here. And gold likes a weak dollar environment. Silver especially likes a weak dollar environment. So this looks really good. I'm excited to see where this all ends up. At the bottom, cocoa, which was our big winner last year, that's basically just kind of fallen off of a cliff a little bit lately. But the Russell's right behind that, down almost 9%. The NASDAQ down 7%. And then the S&P 500 is down almost 5%. So year to date, commodities are still really leading the way. I would stay tuned to that because I think this is going to be a theme for this year. What I really want to see is oil start to come up the leaderboard. I would say that this is in full swing and a commodities cycle is going to continue if oil starts to pick up some slack. But for now, be the long the things that are doing well.
For sure. And Jason, right now I'm looking at the 11 sector spiders of the S&P 500. And can you guess what's at the top year to date?
Energy.
Energy, yes.
Yeah.
Number
Isn't that
one,
wild?
you have healthcare and utilities behind it.
Yes, energy is leading year to date. Once again, and what's funny is it started out the year that way, and I pointed to it, and then it fell off a little bit, and everybody was like, "See, energy sucks." And this is what I love about these type of trades. I love the trades when everybody's like, "This sucks. I hate energy. It's dead. It'll never go up again. I've gotten chopped up a million times in that energy stock." That's a perfect time for you guys to take advantage of trades because most of the time when everybody's shaking out and there's nobody left to sell, who's going to sell the thing? So it starts to move up. So also one thing I want to talk about. So this weekend we put out a report. A lot of people seem to like it. I was kind of putting out something that I thought was a little bit different, a little bit more unique, something just kind of going through my backstory of when I started working for a firm. And so basically we kind of go through his methodology of this trader, which his methodology was finding market bottoms or short-term market bottoms based on moon patterns. So it's very interesting. And so I think you guys would like it, probably dig it, take a look at it. And if you guys get a chance to look at it, you can see it in the description on our YouTube page. So if you're on YouTube, you can go see that. Take a look at it, see if you like it. But I thought it was interesting. But the reason why I'm bringing that up is because I said the signal for today. And so that wasn't commodity related. So I'm talking about the S&P 500 possibly hitting a bottom. I think we're going to see a bottom right about now. I thought we could see it maybe last week, but I wasn't ready to make the call fully. And then this week, I'm definitely saying I think we saw a bottom on Friday. So I put this out on Friday. So I think the S&P 500 will possibly bottom. Do I want to buy the S&P 500? No. I think I want to be in other areas still. But I think the S&P 500 is bottomed. I think you could sell credit spreads here, sell put options, however you guys do it. Not advice, but whatever you guys think you should do for your own portfolios would be a good one here. So how about we get to the slides? Sorry, I didn't change the name of the deck, guys. So they heard me talk about this last week, Sam, but I thought this one was significant for anybody who missed it on Friday. So what are you thinking here, Sam? Do you see anything here that's sticking out to you?
Yeah, man. It's hard to ignore the gold dominating commodities. It's been like that for how long has this been now? Over a year. It's absolutely dominated commodities, and that could be changing soon, Jason.
Yes. And it changes quickly, and I think that's something that we need to all keep in mind. Is one, I really like the idea of having gold here. I think it's a great thing to own. I think gold, silver will continue to move higher. At the same time, I don't know where the outperformance is going to be going forward. I think it would be silver and then move another step up. I think it'll start to be copper and then the commodities complex. So I think the idea here is that gold is outperforming equities, but also commodities are outperforming equities. This is another thing that nobody's talking about, which is the red line here, the NYSE, that's the New York Stock Exchange, to commodities. That has rolled over. As gold has continued higher, that has rolled over completely, and it's probably going to make a new low today. So once again, the commodities complex is just kind of looking like it has some legs right now, could definitely move higher. And I think we're going to continue to see that going forward.
And Jason, how do you think bonds fits into that puzzle? They look pretty constructive here. Do you think it's time for them to catch up, or do you think the red and the gold lines are going to catch down to the blue line?
Yeah, it's a tough one. If you're looking at it like these things kind of move together at times, I would say that that's short lived usually. Sometimes they do, sometimes they don't. But if we're in a commodity cycle, we're definitely going to see a split here. As you're seeing, if you go back to 2000, the left side of this chart, the first peak you see that's when commodities started to get stronger, and bonds started to roll over. Commodities started to continue to outperform everything basically. Gold was the only thing that you remember. Gold had a really great run from 2000 all the way to 2011, but it didn't really do that much better than the commodity complex that entire time. So that's something to continue to pay attention to here, which is I don't think gold is done, but I think some of these commodities will continue to outperform. I think bonds, though, I would just stay away from them. As a trader, sure, you could trade them, tradable lows, whatever you want to do. But other than that, no, no, I
You
wouldn't
still
touch
like staying on the short end of the curve?
bonds. I don't even know. Like as a trend trader, sure. I think it makes sense. You have to take those trades, and that's why we're long the short end. But the long end of the curve, I'd be long. And right now, like we have a spread trade on, and I think that's what everybody should kind of be the way they should be thinking of it, which is, maybe you're short the long end of the curve, which is the 30-year bonds, and maybe you're long the short end of the curve, which is closer to the Fed rate, which is the 3-month bonds. And that's something you guys could take advantage of for now.
That's a really interesting idea, Jason.
Yeah, I think it's a great spread trade. I know a lot of people don't do it, and I know a lot of people don't have access to futures, so you won't do it. But it's still something to just kind of keep in mind as a trader or an investor, or if you have a retirement account. If you have a retirement account and you just want to protect your money, like that's also a way you'd have to think about it, which is I probably don't want to protect my money in long-term dated bonds at the moment. So we're looking at the dollar here, and this is the dollar cycle. Sam, what type of trades are we seeing lately that are benefiting from a weak dollar cycle?
Yeah, man. It's been pretty clear that the international equities have been the biggest winner. And it's been a broad rally. It's not just China or just Europe, but South America's participating. It's an entire. We said, I forget when this was, maybe a month ago on the show, that it's all one trade. If the dollar is going to get slammed, all of these countries are going to work, and that's exactly what we have seen.
Yes. So we're seeing, all these countries are doing very well. And you guys who are on here, please make sure to retweet this, share it on YouTube, however you can. Um, but yeah, if we're looking at this and we're seeing the international stocks catching up, and we're seeing copper catching, and we're seeing gold catching a bit. All these things are catching a bit. They're great bids, and they look fantastic, and they're strong. I don't know why so many people are going, the dollar's going to get strong here, the dollar's going to bounce here, the dollar's going to be great. They're right. At some points, it is going to bounce. The dollar will absolutely bounce. And I don't know the future either. But I do know that the market is telling us that we're in a weak dollar cycle, at least for the moment. I don't know how low it goes. I don't know exactly if it's going to match up with this chart perfectly. Sometimes they do, sometimes they don't. But I do think that it's a good time to continue to hang on to these trades, knowing that they could go a lot further than where they're at today. And I think that's got to be the goal for most of us, which is trying to just be in the right trades at the right times, because that's all you can do. I can't, see the future. I can't put on perfect trades every single time. Nobody can do that. But you can go, okay, the market is telling us this. I want to hang on to these trades that are strong. If you get a pullback in things like China and you're a pullback trader, by all means, that's a good way to buy it too. But I think if you have positions, hanging on to those positions, whether it's copper, like Sam said, it's all one trade, whether it's copper, the junior miners, silver, whatever it is, it's all benefiting from a weak dollar cycle. And that's something that I think will continue.
For sure. And like this started with a really big move. Like this is one of the biggest dollar declines we've seen in recent history. And if you look at the euro US dollar pair, that just had its biggest week since the great financial crisis was ending back in 2009. So we've seen some massive momentum thrusts. And for those to back off in the very short term would make a lot of sense. But thinking out more quarters, 2 to 3 quarters, like these trends are likely to persist for um, at least that long, But
Yes.
let it dance in the short term, I guess, is what I'm trying to say.
Yes, I think that's correct. Let it dance in the short term. This thing's going to go up at some point, and if it does, yes, it's going to put some pressure on some of these areas. But once again, it's like, what's the trend going to be? And I continue to see lower highs in the dollar being the primary trend on the long run. Yes, short term you could make a different case. It bounces, it does whatever, but really right now it's kind of looking like it's rolling over, but it is kind of range bound. I think the area on everybody's chart should be 100. If you see the Dixie hitting around 99, 100, that's probably when it should bounce. If it doesn't bounce, that's a major sign. That means that false breakout signal that the dollar gave when it hit a new 52-week high this year just changed completely. And it broke out to the upside, and then it failed quickly, and then it continues to go lower. That's what we call a weak dollar cycle. That's when we make a lot of money.
For sure. And I'm looking at the 14-day RSI on the Dixie, and it's been oversold since March 5th.
Really?
Yeah, that's a long time for something to be oversold. That speaks to a tremendous amount of weakness in that market.
Yes, and so I think it's going to continue. I think a lot of people look at oversold, and let's explain this real quick to people, Sam. Which just give them a quick lesson. RSI, overbought, oversold signals. So everybody probably knows what the RSI is who's on here. If you don't, it's called the Relative Strength Index. It was developed by Wilder. Basically, you're looking at trend and oversold and overbought readings. So oversold being to the downside, overbought being to the upside. When something moves down a lot, people say, oh, it hit oversold. And then they go, okay, I got to buy this thing now because it's oversold. And when it hits overbought, people think, okay, this is newer traders, not once you really understand the indicator. Newer traders also think when it's high, that's a period of time where now I have to go the other direction. Now I have to short this thing. And really what it's telling you is a bunch of things. One is if it's really strong and it is getting overbought, that's a strong uptrend. If it's getting oversold and hitting oversold and staying oversold, like Sam just said, that's a strong downtrend. And so right now, the dollar, what Sam just said, is in a strong downtrend situation where, yes, it can bounce. Things always bounce. but the general trend will probably be lower.
For sure. And I'll add on to that and say that it works really well if the market is range bound. Like if you want to sell the overbought readings and buy the oversold readings, it works fantastically. But when the market is trending, it can stay oversold or overbought for a long time. So it's a very bad idea to take signals from it in a rain in a market that's trending.
Yes. Yes. And it's easy to get kind of caught up into it. I think every trader did it. I thought overbought, oversold was so significant at the beginning of trading too. And once again, it depends on your time frame. Long-term time frame though, or swing trading, anything over a month, you don't want to read into those too much to the point where you're shorting things the second they get oversold, and you're buying things the second they get overbought. So now getting to aluminum. So, a bunch of people were asking about, aluminum companies and so on and base metals lately. And, we did see aluminum start to break out. We took that signal. Basically, it chopped around and did nothing since I put the signal on, which is very normal. People always ask me, how do I not get, shaken out of things when that happens? It's like, because that always happens. It happens all the time, especially in commodities. Thing I talk about all the time is commodities don't V bottom usually. It's very rare unless it's a liquidity event where you see a V bottom in commodities. So commodities move sideways and they consolidate, just like this pattern that Sam outlined here. So what we're seeing is a base breakout pattern. It did break out, and then it went sideways again for the last, I don't know, I think that signal came about 2-3 weeks ago, and now it's just kind of moving sideways. It pulled back. It's right back to the same spot as the breakout. I still think this is a very actionable trade. And I think it's going to show up in some of these base metal companies, whether it's copper miners, Alcoa. All of these companies, I think, will benefit from higher aluminum prices, higher copper prices. A lot of them mine a lot of different things. So I think this is probably a really good setup to start looking at some of these companies. I'm not saying everybody should go out and buy copper miners and aluminum miners today. I'm saying look at these companies, figure out how you'd like to be positioned. And Sam, what sectors are you looking at for this one? Because I remember you posted this initially.
Yeah, so there aren't a lot of great individual stock opportunities if you're a US investor. So I see Nick in the chat here saying he picked up some Alcoa last week, and that's probably the best equity vehicle for this. You see, there's some of these larger materials companies, larger mining companies. They have some aluminum in their portfolio, but really it's nothing material in a lot of instances. So it's difficult to find a pure play for aluminum. If you're willing to get some type of I don't know, you could use Interactive Brokers and go trade on one of these Chinese exchanges. China has a lot of great stocks that are very leveraged to the price of aluminum. So I think that's an interesting idea. I think obviously I like trading the futures. I think that is always the best way to get exposure. But if you want to stay in the equity markets, I think China has a lot of really interesting opportunities. And there's not like any ADRs for them. So you're going to have to use something like Interactive Brokers where you can go trade on that specific exchange.
Yes, you really have to. I think people need to start branching out more. I think it's great that we have so many ETFs in the United States, but the more you can branch out, the more, like, we have futures in the United States, a ton of them. The aluminum index is literally a futures index in the United States. All of these things are United States listed. So you can have a ton of exposure to a lot of these different areas. Yes, if you want to go further, nickel, zinc, and so on, yeah, you got to go to different areas. The LME has that. That's in Great Britain. But yes, you got to kind of start to branch out. I think a lot more people need to start trading futures. The commodity cycle is just kind of getting started again. We had the huge move. Like, look at that move in aluminum. People don't talk about that. Like, it's a massive move in aluminum that happened from that 2020 bottom all the way to 2022. And then it went sideways. We could see another move just like that again. It wouldn't surprise me to see the same size of a move happen once again. Getting oil to 150, all of these things are very possible in the commodities cycle.
For sure.
Um,
And Jason, look at the trend too. Like, it's not just that it went from 1400 to 4000, but it, except for that one sell off in late 2021, it was pretty much a straight line higher. Like, that is exactly what you're looking for as a trend follower.
Yes, exactly. And you want to ride these trends and have the trailing stop loss just kind of be the thing that gets you in and out of these things. I think it's very easy to just get an understanding of, hey, basic trend following, this is how I would trade it, and make some good money. Once again, they're bigger contracts. You have to have bigger positions to trade these. It took me a long time to get to that size to be able to trade all the futures contracts, but if you do have that size to do it, you should be. Um, Aluminum is one of those that can move, and there's been a million. There's copper, there's steel, there's rubber. I mean, you could go down the list. There's anything that you want to trade is out there to trade.
Absolutely.
So, speaking of China, we've
A lot
got
of China
copper.
talk today.
Yeah, yeah, I like the China stuff because I think it's opening people's minds. So many people you're just like, I can't buy this because you said a funny thing the other week about buying more communism. Um, so many people are like, I can't do this, and it's like it's the same thing. It's all the same thing. Like, somebody could be say ExxonMobil is a terrible company. They dump or BP dumps whatever into the ocean. I'm not buying that. You could do that for just about every stock. Apple uses children to do its bidding in China. We don't want to own that either. Like, you could do that with every single thing. At least I can. I could make a case for not buying every single thing on the New York Stock Exchange. However, there are plenty of things that you just have to buy because they're making money. And as your goal as a trader, is it to make money, or is it to be, righteous and tell everybody how wrong they are for doing these things? I mean, that's one thing. You want to be an activist, be an activist. You want to be a trader, my goal is to make my clients money. And my goal is to help you guys to make money however it is. And so things like China, they're going to come up. If they're in an uptrend and they're making money, I hope you guys are doing it. And also, if you think, if China is really changing their entire economy and able to take over the world because people have bought, like, let's say $1 million or $2 million worth of FXI stock. I think you don't know how big China really is if you think that's the case. So I don't think that it's going to turn into anything of taking over the world because you bought China. Anyways,
The market doesn't know that you own these stocks. Like, it doesn't care at all.
and you're not
The
long-term investor. Like, if you're a long-term investor, maybe that's a different thing. But like, if you're trading it, you're buying an uptrend, you're selling out of it. What are you doing for anybody?
Yeah.
You've just made you're doing more for yourself than anybody else. So what Sam and I are talking about when we keep saying it's all one trade is like looking at copper futures here. It's a very similar chart. And the reason why is that when copper moves, China usually moves and vice versa. And what we're seeing here is this correlation continues to go higher right now. As China has already broken out to the upside, copper will probably break out to new all-time highs. It did make a new all-time monthly closing high recently, but now getting to straight all-time highs, that's going to happen probably pretty soon. Getting over that $5 level could happen soon. Gold's over 3,000. I'm sure copper can get over $5 and silver can get to 50. Makes perfect sense.
Absolutely, Jason. And it's really interesting to see that the correlation there in the lower pane, the 200-day rolling correlation between Chinese stocks and copper futures. You look at the Chinese stock market, and there's the Alibabas and the JD.coms and these big tech companies, and for it to have this persistent positive correlation with copper futures is quite interesting to me. I really don't know what's driving that, but boy, is that a real thing.
Yes. And it's interesting because some people go, okay, it's now that China is more tech related, copper doesn't really matter to China and all
Right.
these things. One,
It
it's
used to be much.
go ahead, Sam. Sam, I think you're on mute.
Am I with you?
I got you.
Cool. Sorry about that.
No, you're good.
No, we like to say that it's not your grandfather's China. Like decades ago, China had a ton of materials exposure, and because they're obviously just one of the biggest economies in the world, and have a ton of um, commodity exposure. And today, it's much more geared towards technology and the Alibabas, but that positive correlation with copper futures has persisted through that change in the equity markets. And I love this, Nick chiming in on our RSI discussion. That's so true.
Yes, this is a really good one. What Nick said is best overbought, oversold advice I've come across was from the Turtle book, meaning Turtle Traders. That's a book by Michael Covell. Overbought can stay overbought indefinitely. Oversold doesn't tend to last long, but can also correct through time, not price. So Nick adding that in was a great add. Nick always adds good value. You guys should follow him on the economy tracker. He's always putting out good information. Had an awesome report this morning that I got to catch up. I love waking up to him, Nick. I don't know if you do that on purpose, but it's nice to come and start my day and just kind of read through Nick's reports and get a good feel for what's been going on in the market this week.
For sure.
Um,
He has a great mind.
Yes. We got to get him back on the show again too. He's always coming up with good stuff. So once again, real quick, we don't need to dig through this too much, but gold is moving, and usually the way the cycle works is copper then follows. It's the way it always kind of goes. So we're kind of seeing copper kind of going sideways here. I know Kevin made a post the other day. We need to get Kevin back on too to talk about it. Kevin and I are always kind of on two different parts of this because I'm a trend guy and I'm like, the trend is up. If it's up, I'm gonna follow it. And Kevin's like a resistance guy, and he's like, there's resistance. Copper triple tops. It's gonna triple top. It's gonna be the end of copper. And for
I
me, I
also
kind of
saw he was talking about the fundamentals of copper. He
yes.
hasn't seen any significant shifts in supply or demand.
Yes, but the problem with copper has always been the supply issue. There's always been a supply issue, and any sort of pickup will always show up in the price before any of the supply and demand numbers. So I think this pickup that we're seeing in Chinese stocks is also going into China, which will start to turn into them having a higher GDP and so on, which will turn into copper continuing to move higher. So I think that the market's telling us everything we need to know. I think when we get too stuck in the supply and demand numbers, and Kevin would tell you that too. Kevin would say if the market's moving up, it's saying it. You always want to weigh the most on price because basically that's how we get paid. But he does think copper could triple top here. I think we're going to continue to move higher. I think it's just a thing of both of us could be right. It could just start to top out here and go sideways for a little bit and then break out.
He's also very short term too, Jason.
Yes,
Like
so Kevin's always once on a 1 week time frame.
yeah.
So that's another reason why he's always looking at those things for those pullbacks. So he's kind of giving you guys a couple ideas here. So I'm giving you mine, which is I think the trend is up, but I'm cool with a pullback here. It would make sense. But also Kevin's giving you, hey, if you are making a target on a trade, and this is the other thing that's significant. If you have a target on this trade, it could be targeting the zone where we're at today. You could get out and either wait for a new breakout or take your profits and run. So, it's not about a right or a wrong. There's plenty of times where Kevin and I are both right, or plenty of times where we're both wrong, or one's right, one's wrong. It's more of a let's just look at the evidence, see what could happen, and then go from there.
That's so true.
Speaking of massive patterns, this is
Yeah.
this is a Sam pattern. I know this.
That's a big smiley face, Jason.
Yep. Yep.
I love it. No, this is about
This
as
is great.
textbook as they come. And there's some people out there like Steve Steve Straza will give me a lot of grief for marking this up as an inverted head and shoulders pattern. He says that they should only be bottoming patterns, but I don't really agree with that. I think they can be continuation patterns, and that's
They're
exactly what.
continuation patterns all the fucking sorry, all the time.
No, it's true. Yeah, so I don't have a problem with it. And either way, you have a clear as day neckline there at $5. The market's respected this. I marked it with red arrows there. You can see it's found resistance at this $5 level 5 times. So how many times do you need to knock at the door before they let it open? I think the sixth time could be the charm here.
I do too. Once again, it's how technical analysis works, old school technical analysis. I don't know if they teach. I'm sure they teach it to you in CMT, but the kids these days, I don't know if they learn this, which is as it hits, just like Sam said, as it hits an area more times, it's more likely to break through that zone. That's old school technical analysis 101. So now we've hit it over and over and over again. And so can we get through it? Yeah, probably. And you guys should look at this for all patterns. This works in stocks, it works in every single thing you could ever find price action charts for, which is everything. So look at that, understand that this is hitting it once again, could possibly break through it this time. I think it goes here. I have no reason to think it shouldn't. If there's a big pullback in China and money starts to flow into the United States, the dollar gets strong. Sure, I'd say yeah, it's going to stop right here. But at the moment, I have no reason to think any of that.
For sure, Jason. And we've seen some of these miners. I was talking to you the other week about, man, Jason, I'm doubting this copper breakout. These miners don't look good.
Yeah.
And sure enough, that was just the dumbest thing I could have ever said. No, but for real though, like it was concerning me about the breakout, and we've seen the miners pick up in a very, very significant way on like this Friday for the commodities trade of the week in our commodities report at All Star Charts. I outlined the stock. I don't know how to say it. Buenaventura. It's ticker BVN, and that's one of the bellwethers of the copper mining industry. One of the largest Peruvian stocks, and that one has picked up some serious momentum.
Yes, and it's just you see these things happen, and it's just like everything in life. You got to take it one thing at a time. Our brains just get way too overwhelmed by too much stuff. And as we continue to look at everything and go, this should happen, this shouldn't happen, it's like, well, copper is moving. Let's stay long copper.
Right.
And when
Just
the
trade
then
what's
when
in front of you, I think.
yes, and when the miners move, we'll get long those too. And we'll just wait one after another. Another thing that we can look at for global growth is lumber. So lumber futures here, huge base, ready to break out, move higher. Sam, what are you thinking of lumber? Because I think this is a great setup. We got long it actually all the way back here, and it came within inches of our stop, and then it continued to move higher, and it's just going. And it also has great seasonality right now. There's a lot of things going for lumber, but this is also in conjunction with this massive base breakout. So, Sam, basically that breakout's from all the way to 2022, all the way to today, when lumber puked in 2021, sideways, now new breakout. So, are you thinking of any areas inside it? Because people keep asking this, which is, what do you want to buy if lumber's breaking out? Because most people don't trade lumber. So do you have any areas that you're thinking of?
That's a really good question, Jason. And my honest answer is no. I think you just buy the lumber futures. We've seen a really significant dislocation between home building stocks and lumber futures. If you zoom out on these charts, going back to 2000, and throw some type of correlation on there, like I like to use the 200-day rolling correlation, you've had a very significant positive correlation between lumber futures and home builders for a very long time. And when it gets close to a zero correlation, it usually hasn't lasted long, and that positive correlation has reasserted itself pretty fast, but that hasn't been the case. I see that distribution pattern in the home builders, something like ITB or XHB. They're very well advertised, very well defined, and they're resolving lower pretty decisively. So I I don't know what to do about those. I think you just want to leave them alone, let them dance. And if you're interested in trading lumber futures, just trade lumber futures. And you like to talk about the lumber producers. I think there's a few interesting opportunities there. I don't have any tickers off the top of my mind, but
Only one I can think of right now is International Paper.
and like those
IP.
companies are so boring. Like they're gonna
Nobody wants to
lose.
talk about it.
Yeah,
Nobody
they're gonna
wants to
lose
talk
like
about it.
0.5% a day.
You know what's
And
fun though?
yeah,
Making money.
yeah. I think well, the bottom line is I think, yeah, you could trade international paper, but you're gonna make more money trading lumber futures.
For sure. I agree people should go to where the money is. But if you don't have access to it, I do like the Wood ETF as something you could trade. It is tradable. It doesn't trade exactly like lumber, but it benefits from lumber
So does that have
prices
lumber
moving higher.
futures or is that
Nope.
stocks?
It's yeah, a lot of people think it has lumber futures, but it doesn't. It's just the stocks inside of it. Mainly the paper companies,
Sure.
International Paper,
And I'm looking at it
Weyerhaeuser,
right now, and it looks like it's a lot of, international equities.
there's international,
So,
but
like,
there's
there's
also a
not
lot of
not ADRs for all of these, you know?
are you looking at the Wood ETF? Are you sure it's Wood ETF? Is the top one should be IP.
Yeah, no, I'm looking at the Wood ETF, and IP is not at the top.
Hmm.
Let me go to the ETF website,
Yeah. Well,
see if
maybe
that's any different.
who knows? Koifin sometimes is its thing, but it might not be the top one anymore. Is it in there though?
So
Because I know it's in
yeah,
there.
it's like number 10, something like that.
Hmm.
It's about
Weyerhaeuser should be higher than
4.6%
it
of the
though.
ETF.
Yeah. So I
So
like the
that is an
idea of trying to.
interesting vehicle, Jason.
Yeah, the vehicle's good itself. I've traded it for many years. It rotates obviously from what is the biggest producer and not, depending on market cap. International Paper though has a nice setup if you look at the chart. So we'll end on this one, Sam. Silver short interest, all-time high. This is a chart that Sam put out at the gold rush pretty recently. So, what do we think here with silver? Are we thinking that this is going to be everybody keeps asking about this. This was a question that even came to us on Twitter. Is it the massive catch-up trade that we're going to see now in silver, and this thing's finally going to happen, or is it a dud?
Yeah, I don't think it's a dud, Jason. I'll tell you that much. How much it catches up, I don't know. But I do think if it's above 35, the odds of it hitting 50 within 6 months, 6 to 12 months, let's give it, are very, very high in my opinion. If you look at the chart, there's very little overhead supply if you're above 35. So I think it's clear as day there. If it's above 35, you can be as long as you want targeting that 50 level.
Love it. So let's end it there. For you guys who have any questions that we didn't get to, I know Nick had one about energy stocks that would benefit from oil getting back above 75 again. And I'll just say XOP would probably be the vehicle that, and what's inside of that vehicle would benefit the most from oil prices moving higher. So that's where I would start looking. I don't really dig into the individual stocks inside each sector too much. That's not my wheelhouse, but I do think there's going to be a benefit there. Not to mention just the OG names, obviously, things like Chevron, Exxon, um, CNQ, which is a Canadian energy company. These things will all benefit and probably move higher. I like CNQ a lot. I don't really like anything Canadian energy besides CNQ. It's one of the only ones I do mess with. So continue to look at those areas, continue to find trades, and we'll see you guys on Friday with the Holy Macro Show. Once again, we'll be back here on Monday next week at 11 a.m. Leave any questions in the comments for this on YouTube, and we'll get back to you as soon as possible. Take it easy, guys.